Good morning. I'm Pete Najarian. This is the Take for Market Rebellion on this hump day. And you go back to yesterday, you take a little look, and wow, the NASDAQ absolutely start to finish. The acceleration was impressive. The move to the upside, about a 1% move or so, up 145 points. Now, on the other hand, the Dow was under some pressure throughout the day. It was down close to 200 points at one point and actually recovered off of that, still finished in negative territory, down about 70 points. And now you're starting to see a little bit of a flip today from that area, but we'll get into that in just a second. So the S&P finished up about 14 points. That was nice and strong and impressive. But I'll tell you, the strength, once again, it goes back and forth and back and forth. And we all know how it's been moving around, but certainly the high multiple stocks, that was the movers yesterday. That's where the strength was. So it was NVIDIA, it was Moderna, it was Zoom, it was Okta, it was DocuSign, it was Peloton, all of those types of names moving to the upside. Throw in Tesla, which had a very, very nice day as well. Then add in the mega cap techs, and you've got another nice move. You've got Microsoft added to that, Google, Apple, Salesforce, throw that name in there as well. There was some weakness. We had some weakness in some various areas, and in some cases, it was specific sectors. In other cases, it was just very specific names. We had Nike yesterday, had a little bit of weakness, JP Morgan and Goldman a little bit, Micron, NXPI, another one of those in the chip space. So it really just sort of depended on where you were looking. As a matter of fact, yesterday, biotech chipped in with a nice little move to the upside, about 1.5%. You had technology up about 1.25%. You had consumer discretionary. That's been a very hot area as well. That was up about 1%, but you had a little bit of pressure on the financials. And when the financials are down like that, and I mentioned some of the names that were pulling on that, that's going to have some influence specifically on the Dow. And that's why we had probably the bigger part of that discrepancy. Now, this morning, we've got earnings season. That's kicking off. We've got all the big financials. And I think the big two that everybody are looking at is really where the focus was. It was JP Morgan and Goldman Sachs. Now, both had blowout earnings. However, when you break them down, one is far more a bank, obviously JP Morgan, and the other, Goldman Sachs, is a little bit of everything, but I would not call them a bank. They get put into that category a lot, but let's just call them a financial. And their numbers were absolutely extraordinary. They absolutely crushed every number, every metric that you could look at. And that's why that stock's actually trading very, very nicely today. On the other hand, the flip side, look over at JP Morgan, actually under pressure. As a matter of fact, when you look at it and it's in negative territory, even though it had some really impressive numbers, a lot of the negative focus really was on loans and loan demand. And Jamie Dimon pointed that out himself. So that's sort of the tale of those two right now in terms of how things are shifting around. Now with crude back up and over 61, that's actually something where we are seeing the absolute what's really outperforming either up or down. This happens to be the upside. It's energy, up about 1.6%. And a lot of that having to do with, as we watch the price of crude, is it's moved back and we've watched it floating around this 60 area, but a nice move up above 61. Certainly a catalyst to have that particular sector moving to the upside. So you've got Chevron, Goldman Sachs, got Caterpillar, Boeing, United Health. So you've got some of these industrials as well helping out. And that's why we are seeing a Dow that's up about 170 points the last I looked. And yet you look over at the NASDAQ, not doing a whole heck of a lot. Neither is the S&P. Both just sort of pausing, it looks like, and very, very close to unchanged, but in positive territory. Last I looked, that could have changed by the time we got on here. Now, financials, like I say, those are mixed. But the volatility index, that has been stuck right here where we are. Call it 16.5 to 17.5. We have been pinned here, it seems like, for a long period of time. Even though it's only maybe a week and a half, 2 weeks, it feels like forever. It feels like we've been talking about volatility, holding it around that 17 level. By the way, yesterday, even with volatility being a little bit lower, the volumes continue to be there. Matter of fact, we were well over that 33 million contracts yesterday trading in the option space. So we continue to see really, really nice, big supportive volumes in the derivatives markets, which is something great. Now I'm going to hit a couple of unusuals. We're going to get out of here. Understand what I'm talking about, please. And if you don't, when I'm talking about the options world, just grab books, grab information, grab something off the internet, grab something for the Market Rebellion team. We've got the educators over there. But understand the growth industry, which is the derivatives markets. I say it every single day. I've said it every single day that we've ever done the take. And I think it's really, really important because so many people are still not educated in this area, and it is important. And some of the moves and the risk that you can put on where you can actually control that risk is incredible. And so anyway, we're going to jump into Facebook. Facebook, it's down a little bit. It was trading, last I looked, it was trading right around 304.75 in that sort of area. And we had a pretty substantial buyer, 7,500 of the April 30th expiring. So you are buying a little bit of time all the way to the final Friday in April, April 30th. The 310 call. So these are just out of the money. I mentioned it was trading right around 304.75, somewhere near there. So these 310 calls, they're going for about 850. 7,500 of those were bought. Now, that's a very expensive trade. What I like about this, however, is this was spread off. And what that means is they're buying the 310 calls, but they're selling the 315 calls. And so that brings down that premium. It also caps your upside, but it brings down that premium that you'd be paying instead of having to pay that full 850 or thereabouts. It's getting spread off about against the 315s, which are actually trading somewhere in the upper $6 range. So just keep an eye on that. That was the trade that was put on. That's call to call spread. It's an upside vertical. So that one is exactly how they're playing that. Now, some of the big boys. Now, Hawaiian. I talk about this name because I love Hawaii. Everybody who knows anything about me knows that I spent a lot of time over there in my lifetime. I love the airlines. I think the airlines are in a very interesting position now. We've already watched a lot of that recovery. We talk about the reopen all the time. We focus on Delta. We focus on American, United, and the usual names, Southwest. We very infrequently talk about Hawaiian Air. Hawaiian Air is an interesting one to me because of some of the exposures internationally as well. So stock trading right around 26.15. We had a buyer of 4,000 and they bought some time. They went out to May, 4,000 of the May 28 calls. They started paying about $1, paid up to about $1.15. So with the stock trading 26.15, clearly these are a little bit out of the money, expecting maybe or looking forward to a potential move to the upside in a relatively short time frame. But these are all the way out to May. So you're basically getting the whole month of April and May before these expire. Folks, have a great day of trading. I look forward to seeing you tomorrow. We'll see you on the take. I got a clear slate today. Got a lot of things I'm going to be able to get done, hopefully today, accomplished. But I will see you tomorrow on the take, and I've got the halftime report as well tomorrow. So look forward to seeing you then.